Well, hello everyone and welcome to Momentum channel. In this video, we're going to be taking a look at 3 Canadian dividend stocks in communication service sector that investors, especially here in Canada, can consider to buy or add to their watch list in the stock market right now. Without any further ado, let's get into it. The first company for us to review is the largest communication service company here in Canada, and it is no other than Bell Canada, which is commonly referred to as Bell. It is a Canadian telecommunications company that is headquartered in Carrefour Alexander Graham Bell in Bureau of Verdun in Montreal, Quebec, Canada. As Canada's largest communications company, Bell Canada delivers a wide range of service innovations to consumers, businesses, and government customers across Canada, including their LTE advanced fiber internet and TV, wireless home internet, cloud and data hosting, IP voice and collaboration, connected cars, smart cities, and Internet of Things. What's more, Bell Media operates the country's top media brands such as CTV, V, TSN, RDS, Crave, Nouveau, and iHeartRadio, and is a leading investor in Canadian content creation, including local television and radio news, sports and entertainment programming, and other original TV and film productions. With their extensive network of Bell, Virgin Mobile, Lockheed Mobile, and The Source locations, the Bell Canada is also one of Canada's biggest offering of retailers when it comes to communication services. As you see here, Bell Canada is traded on Toronto Stock Exchange with ticker symbol BCE, and the last trading price for the stock was at $64.95. Looking at the latest quarterly earnings report by Bell Canada, which was released on August the 5th for second quarter of 2021, the results showed a net earnings increasing to $734 million. That's an increase of 149.7%, with their net earnings attributable to common shareholders growing 189% to reach $685 million. What's more, the company delivered 6.4% consolidated revenue growth and 6.2% higher adjusted EBITDA. 115,916 total wireless mobile phones and mobile connected devices, as well as retail, internet, and IPTV net additions, up 75% year over year. They also reported to be a leading growth in wireless service revenue and mobile phone average billing per user, as the company welcomed 44,433 postpaid mobile phone net additions, which is up by 45,393, and increased net mobile connected device addition of 22.2%. They also have a retail internet fiber net addition up 80%. To reach 27,112 with 12% residential internet revenue growth. The company continues to have its expansion of 5G and have their leadership in that domain, and they are on track to cover 70% of national population with 5G service by year end. And when it comes to their financial position, they are also showing strong financial, including $5.3 billion of available liquidity, enabling their accelerated capital investment, wireless spectrum purchase, and dividend growth. And the company also continues to be an ongoing industry leadership in environmental, sustainable, and governance standards, highlighted by the launch of the Bell for Better initiative. You can see here on the graph at the top the past 5-year stock price volatility. In the past 5 years, the Bell Canada stock has returned an overall 5% return. You can see definitely some considerable ups and downs. In the past 1 year, the lowest that the stock price has been at $52.52, and the highest has been at $65.16. The company has a market capitalization of over $58 billion, and that makes them the largest communications company here in Canada from a market caps perspective. Looking at the valuation metrics, the company's price to earnings ratio is at 20.2. Their price to book ratio is 3.19. Their price to cash flow ratio is 7.10. Their debt to equity ratio is 1.5. Their return on equity is 16.5%. And the higher this number, the better it is for us. And their return on assets as well as 4.64%. When it comes to their dividend, you'd see that their last dividend amount per share is about 87 cents per share. They do pay their dividend on a quarterly basis, and their dividend yield is currently at 5.38, close to 5.39%, which is quite remarkable in that sense. Their ex-dividend date, the upcoming one, is at 14th of September. So if you want to take advantage of this upcoming dividend payment, you have to have shares of Bell Canada prior to this date listed here. And in terms of their dividend growth over the 3 years, the annualized growth in their dividend over the span of the 3 years has been 4.18% per year. And over the past 5 years, the annualized dividend growth has been 4.68%. Moving on, the second company for us to review is the second largest communications company in Canada, and it's no other than Telus Corporation. Telus is a dynamic world-leading communications and information technology company with $16 billion in annual revenue and 15.2 million customer connections, spanning their services of wireless, data, IP, voice, television, entertainment, video and security, healthcare, and agriculture. The company is based in Vancouver, British Columbia, and it was originally based in Edmonton, Alberta, before its merger with BC Tel in 1999. You'd see here the span of their services. For instance, from a healthcare technology, they offer virtual care for patients, increasing efficiency for healthcare professionals. They also have services in agriculture innovations through their cutting-edge agribusiness management platforms. They are also offer their services in home security, TV, small business solutions, home phone, internet, online security, and mobility solutions. Telus is traded on Toronto Stock Exchange with ticker symbol T, and its last trading price was at $29.07. Moving on, looking at the latest quarterly earnings report for Telus Corporation, which was released on July 30th, 2021 for their second quarter 2021 results. The company has continued their strong momentum in Telus International and Health Services with robust financial results driven by acquisition along with strong organic customer growth. They have continued to have consolidated revenue and EBITDA growth of 10% with robust net income and EPS expansion of 9.2% and 8.7% respectively. They are showing year-over-year dividend growth of 8.6%, showcasing strong and consistent operational execution and reaffirming their 2021 annual consolidated financial targets, including revenue and EBITDA growth of up to 10% and 8% respectively. In terms of the stock price volatility, the stock over the past 5 years has actually grown and appreciated by over 32%. The company does pay its dividend, currently yielding 4.35%. It does pay its dividend on a quarterly basis. The next upcoming dividend payment as the time of the making this video would be on October the 1st. And if you want to take advantage of that, you have to have shares of Telus prior to September 9th. So if you own shares of Telus on September 8th or any date before that, including September 8th, then you are entitled for that dividend payment. They have increased their dividend over the past 3 years with an annualized increase of 5.38%, and over the past 5 years they have increased their dividend amount with an annualized percentage of 6.20%. The company has a market cap of over $39 billion, making them the second largest communication services company in Canada. Their price to earnings ratio is at 30.9, price to book value of 2.68, price to cash flow of 9.20, debt to equity ratio of 1.36, and for debt to equity ratio, the lower the number, the better it is for us. As for return on equity, we are seeing 9.35% and return on assets of 2.91% here. Moving on, and before actually we share with you the third company here, I wanted to ask you for a favor. Here on Momentum Finance and Stock Investing channel, we post several videos every week related to investing, financial freedom, and related videos. And we appreciate if you can actually give this video a thumbs up and make sure to subscribe for more related videos. Thank you for your support. Lastly, on the third spot, we have Rogers Communications, and it is the third largest communication services company in Canada. And this company offering communications and media services, operating primarily in the fields of wireless communications, cable television, technology and internet, with significant additional telecommunications and mass media assets. Founded in 1960, Rogers has grown to become a leading technology and media company that strives to provide high-quality wireless, residential, and media to Canadians and Canadian businesses. The last trading price for the stock was at $64.01 for their Class B non-voting shares. Moving on, if you look at their last quarterly earnings report for second quarter of 2021, released on July 21st of 2021, Rogers company is showing positive wireless service revenue growth of 2% and adjusted EBITDA up 10%. They're also showing strong wireless postpaid net subscription additions of 99,000. They are showing increased cable service revenue up by 5% and growing their adjusted EBITDA by 8%. Their internet net subscriber addition including 15,000 net new broadband subscribers and 𝗖𝐋𝐈𝐖 net subscriber addition of 66,000. They grew their media revenue by 84%, reflecting recovery of television advertising associated with their return of their robust live professional sports programming. And lastly, they have continued to expand their coverage of 5G and they are to cover over 50% of the Canadian population, and their coverage will reach over 70% of the Canadian population by the end of 2021. In terms of the last trading price, as we talked about, $64.01 for Class B shares. Over the past 5 years, the stock has been up by 11.87%. The company does pay its dividend, currently yielding 3.12%. The amount of dividend is 50 cents per share at this time, and it does pay its dividend on a quarterly basis. The next payable date for this dividend as well is on October the 1st, and if you want to take advantage of that, you have to have shares of Rogers before September 8th. That means September 7th or any date including that before that. Looking at the valuation metrics, Rogers has a market cap of $25 billion plus, making them the third largest communication services company in this field in Canada. Their price to earnings ratio is 19.9. Their price to book ratio is 3.20. Their price to cash flow ratio is 8.9. Debt to equity ratio of 1.94 and return on equity of 16.48, and their return on assets is 4.34%. All right, and lastly, let us take a quick look at the comparison of this company side by side. We have an honorable mention here, which is the 𝐁𝐘𝐋𝐈𝐖 Communications Class B non-voting shares. 𝐁𝐘𝐋𝐈𝐖 Communications, again, one of the large communication service companies here in Canada, but it's actually smaller than the other three that we talked about in this video. In fact, from a market cap, 𝐁𝐘𝐋𝐈� Communication is only $17.6 billion, which is smaller than the other companies. Nonetheless, we wanted to mention that because it is considered to be one of the top communication service companies here in Canada. You can see from a price to earnings ratio perspective, when we compare, here Rogers has the lowest, followed by Bell Canada. Usually for a lower price to earnings ratio for companies in the same sector, that is a good sign, as long as it's also we wanted to compare that to their own, of course, historical numbers. From a debt to earnings ratio, you see here the best kind of ratio belongs to 𝐁𝐘𝐋𝐈𝐖 with 1.02 multiple. In terms of the earnings per share, the highest amount actually is for Bell Canada, followed closely by Rogers Communication. And lastly, from a dividends yield perspective, the highest dividend payer among these companies is Bell Canada, with a dividend yielding close to 5.4%. And the second highest dividend then is for Telus with 4.35%, and close to a tie for Rogers and 𝐁𝐘𝐋𝐈𝐖. You can see 3.1% for Rogers and 3.2% for 𝐁𝐘𝐈𝐖 Communication. There you have it, folks, a quick review of 3+1 top dividend paying companies and stocks here in Canada in the communication services sector. I hope you found this video beneficial and you gained something of value from it. If you did, please don't forget to give this video a thumbs up, as it means a lot to us and will help the channel to grow. And of course, please subscribe to Momentum Finance channel. Here at Momentum, we post several videos every week focusing on the stock market, investing, and financial freedom. Thank you, and we hope to see you next time.